Let's get some views in. Nilesh Shah is joining us, Managing Director at Kotak Mahindra Asset Management Company. Nilesh, good morning. Great to have you with us here on the show. Might I add, congratulations. New highs finally. What do you make of it? What do you make of the mood, the environment, and trajectory for markets from here out?
So one, there is a Triveni Sangam of flows, sentiment and fundamentals for India. Flows led by domestic investors, foreign investors, retail HNI. There is a lot of demand for Indian stock and limited supply. IPO season is beginning, but it has not reached peak like our monsoon. Second, sentiments are positive in India. We remain one of the fastest growing major economy with macroeconomic indicators which are very, very positive. And finally, it is the fundamentals which prevail over flows and sentiments over a long period of time. On a near-term basis, we remain one of the expensive market in emerging market. But if you take a longer-term view, then we remain one of the cheapest market. So this is a Triveni Sangam of flows, sentiments, and fundamentals.
Nilesh, I'm seeing one statistic which shows that the Indian market up move this time in the last 6 months has been very broad-based compared to what we are seeing globally. So the percentage of stocks above the 200-day moving average as of yesterday in the Indian market was about 75%, which is higher than the 68% level that we had in December of last year when we had got to those previous high levels. So the rally in India, unlike in the global markets, has also been very, very broad-based. And we've seen a near 20% up move in the mid and the small cap index since March. Nilesh, any signs of euphoria? Typically, when markets get to all-time high levels, you've got, the bullish indicators pretty much peaking out. This time, how are you sensing the sentiment in the market? Any signs of euphoria which indicates that we could enter a period of fatigue or correction or reversal?
So euphoria, I wouldn't say, but optimism, undoubtedly, yes. As I mentioned, this is flow-driven rally to begin with, where there are many buyers and far less supply. Private equity funds are providing supply, balance advantage funds are providing supply. But bearing that, the IPO, OFS, QIP season has not yet begun. And invariably in such kind of scenario where demand is outstripping supply, buyers are more aggressive than sellers, there will be some amount of optimism. We haven't reached euphoric valuation for the market. Of course, there are certain stocks where valuations are defying gravity. There are some small and mid-cap stocks where I will urge caution because there is a wide gap between their prices, valuation, and fundamentals. But on a broad level basis, market is not euphoric, it is optimist. Valuations are at the higher end of fair value, but it is not expensive valuation like, let's say, it was in 2008.
All right, Nilesh, just hold on to that thought. You have these Adani Group stocks where there's a very large trade that's taken place with Adani Enterprises. It's up, close to around 1.5%. Equity has changed hands on Adani Enterprises. Even Adani Green, the volumes are very, very high. In a couple of minutes, you have close to 5 crore shares that are traded on that counter as well. So just keep an eye out on a couple of these names. Big volumes is what you're seeing on them. Nilesh, good to see all-time highs, but some caution needs to be thrown in as well. What would be the factors you're considering? Maybe it could be earnings, the monsoons as well. Maybe the street is anticipating very high earnings, or do you think we get them? And the monsoons as well could be a bit of a headwind, right? Hopefully things pick up there.
So to some extent, our economy has, get some resistance power against adverse monsoon. So undoubtedly, we'll have to keep an eye on monsoon, but it's more likely to be a speed breaker than a U-turn. For us, the bigger challenge is one central election 2024. What kind of government formation and political process will be there? We have seen in 2004 as well as 2009 as well as 14 and 19 last 4 attempts. We have seen an impact on market on a short-term basis because of election results coming either in line or against the expectations of the market. The second thing to keep a watch is Fed and RBI pivot. Clearly, inflation is coming down, but not at the pace which will allow elbow room to Fed to cut the rates. Will they raise rates? How much they will raise rates? When will they cut? Will they take out liquidity? All these factors will have material impact on our market in the near term. Over longer term, what matters is earnings. This year, earnings growth is about 10%. Next year, market is expecting, as usual, about 15 to 18%. We think that earnings growth is unlikely to be delivered. We should be more towards, 10 to 12% kind of earnings growth next year. So how does market weave in this earning deceleration? All those factors will continue to have volatility in market. But one thing is reasonably sure, that at lower level, there are likely to be more buyers than sellers.
So, Nilesh, completely agree. Optimistic, but no, not euphoric. I mean, maybe some euphoria in some parts of mid caps and small caps, etc. But that's always the case, right? I mean, you can't avoid that. But on frontline indices and all, nothing. I mean, no euphoria at all. Just to take off from the last point that you mentioned, so longer. Basically, what you're saying is longer bull phases, very shorter and short-lived bear phases in that sense. I mean, that's the roadmap one should expect, broadly. I think we lost that line with Nilesh.
Largest economy.
Okay, I think we have Nilesh back. Nilesh, sorry, we lost you there for a second. Go on, please.
Sorry. So we are moving from 10th largest economy to 5th largest economy over last decade. And now we are moving towards third largest economy. What we saw over 30 years in terms of GDP and market cap creation, we are likely to see over next decade or so. In that journey, undoubtedly stock prices will get supported. And as I mentioned, we have to deliver on the 3G of growth, governance, and green transformation. Our earnings growth has to be better than peer group. Our governance standards has to be better than peer group. And our economy should transform towards green economy better than peer groups. If we deliver this 3G of green growth and governance, I have no doubt in my mind that we are on a longer term bull market. Of course, it will get punctuated short-term volatility, but at every correction, it will be a buying opportunity, provided we deliver on this 3G.
Nilesh, if we could just request you to stay on. Markets are at a record high, but Nilesh, just want to talk a bit about the flows, right? That's been one of the three drivers of where we are today. While the FI flows have been strong, the retail inflows via the SIP route have been steady. Are you sensing some disenchantment with the HNI community? Because when we look at the discretionary spending or the big HNI inflows into the Indian market, it's been absent or not roaring the way we've seen with respect to the FI inflows. Is that something a bit of a worry, or what's leading to that? Is this something that you've observed too?
So in the SIP, Reema, now it is no longer just pure retail. I have known clients who are putting in crores of rupees via SIP into market. Many HNIs and family offices have also recognized that it is impossible to time the market. There is no harm in trying to put some amount of your wealth into market through SIP. They all earn regular income and they are doing SIPs. The second thing possibly, and HNI is a very, very intelligent and large segment. So there are pockets with divergence behavior. My feeling is that there are still some HNIs who are sitting on cash, who were waiting for correction to enter into market, and they found the market momentum little bit against their expectation. My feeling is that those money will probably wait for correction to enter, and which is why I mentioned that today investor has matured a lot. Generally, when markets are in momentum or rising, we are seeing SIP minus redemption and net flows dwindle. And generally, when markets are cheap and falling, it is SIP plus subscription, and suddenly we invest lots of money at lower level.
Okay, all right. Nilesh, thank you very much for joining us. Once again, thank you very much for joining us on this day when the Nifty finally makes a new high. Appreciate it. Appreciate your time here on CNBC TV 18.